So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the deferred sales trust, is the best way for you to exit your highly appreciated cryptocurrency, real estate business, save a failed 1031 exchange. I'm your host, Brett Swarts. Each episode, I am joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming, by the way, on expertcresecrets.com. That's expertcresecrets.com. I'm excited about our next guest. He's out of the great state of Philadelphia, and he is the creator and owner of Practical Wealth Advisors and the host of the Practical Wealth Show podcast. The primary focus of his financial planning firm is to help individuals and families become financially free by following the principles of wealth creation that have endured for centuries around the world, and so much more. Please welcome to the show with me, Curtis May. Curtis, how you doing?
I am great. Brett, thanks for having me.
Absolutely. It's a pleasure to get to know you a little bit here, and I'm looking forward to this interview. So before we get started, would you tell our listeners a little bit more about your story and your current focus?
So my story is I'm the, it's all still with some toes every time I do this, but I'm the anti-Wall Street financial advisor, and I teach something called principles-based planning. I actually got into the financial industry typical. My focus was like buy-term investor difference, and I was with a company that specialized in that for 12 years. I actually got my licenses to do business, my insurance license, and a couple of years later after that, my securities license. But I got my insurance license in college, my junior year, when I began to realize the NBA was not looking for 5'11" shooting guards and with a mediocre handle. So but I'm a third generation entrepreneur. My grandfather was in business. My dad was in business. And I've heard from the time I was 7 or 8, boy, you'll never make any money, work for somebody else. And so I thought you majored in business to go into business while I was in college, which shocking, nobody else was thinking that way. And I got into the industry midway through, probably late 1999. I read a little purple book called Rich Dad Poor Dad, and I started to realize what he was talking about and what I was doing, max out your 401k, buy term investor difference, was not, it didn't gel. And then you start studying like successful people. Like I told you, look at the Forbes 400, they're on there, they build businesses and they buy real estate, but that's not what we were teaching. And so it took me a minute to 5 or 6, 7 years to kind of figure out what I wanted to do with that knowledge. And but it kind of clicked for me around 2010. I read another little book called Become Your Own Banker. And then I kind of been, doing business that way, kind of focusing people on velocity of money over accumulation. And we've really kind of refined that into a process probably over the last 3 or 4 years. And here we go. Here I am.
Hey, amazing. Okay. Hey, absolutely love it. We'll dive into some of those secrets here in a minute.
Yeah.
And before we go there, I actually played some hoops in college. I was fortunate if I was the 6-foot white guy who could shoot and had some handles, right? So, but it was small ball, but they pay me, pay for school, so which is cool. So I have a love for hoops. So maybe we share a bit of that. But so before we dive into some of those principles here on building practical wealth, I want to take a step back, Curtis. I believe we've all been given certain gifts in this life, and this gifts have been given to us to be a blessing and a help to others. And I want you to go back maybe to the high school days, college days, whatever, earlier days. And I want you to maybe remember maybe 1 or 2 of those gifts that you kind of identified at that point. what were those gifts? Maybe they're strengths. Some people call them superpowers. But maybe what are one of those gifts that you believe you've been given, and how does that help you help and bless people today?
Well, I think looking back at one, I think in fifth or sixth grade, I didn't realize it. Like I did a Colby, and I'm like a 7 fact find. And so I figured out that I'm really good at finding out what I want to know, like information, and I can assimilate information really fast and draw it to you on a yellow pad. And but one of the things I think that sports helped, like when I coach, I always tell people you got to have the will to prepare to win. And, winning, everybody wants to win, but you have to do the work. So a lot of the things that if I felt slighted or insulted, athletically or whatever, I could let that drive me like the whole summer. I'm thinking of an incident where a coach wouldn't put me in a practice, when the new recruits come up, and I was insulted, and I that drilled me where I shot 400 shots a day. I ran 4 miles a day. I came back a better player because I was so pissed off. So I can hold on to that in a good way for long periods of time. So I really do the same thing in business, but I think I learned it, translating it from sports, where I wanted to be the best, at what I'm doing. And every quarter I read this book called The 12-Week Year, and I try to, try doing 12 weeks, which you can do in 12 months. And every quarter, one of my goals is to learn something new or get better. And that is kind of direct from high school, college. I always want to get better. I'm going to work on my left. If I go play ball, it's okay. Today, I'm just going to go left today. You need to go somewhere new. You don't have to prove yourself. Okay. And you can just say, all right, I'm just going to work on my left hand. Say, I'm going to drive left. I'm going to go to the basket. I do that in business today, where I always try to compete against myself. And I'm always trying to get better every day, learning more, because
Beautiful.
Yeah, that's kind of what that's a direct thing I think I take from my background in sports.
I relate so much on that. I absolutely love that. Right. It was the internal drive with myself, but I let the external fuel that fire. Right. And try to perfect the craft, and working on the left. I remember
Right,
I always remember, it was like third grade. I had a coach, and he said you got to be able to go right and left, and so that whole summer was just working on my left hand layup, and it came to the point where eventually I could go both. There was no weakness each side. I could go right and left. I watched Kyrie Irving the other night, and he like does this bank shot with his left on the spin. I'm just like, it's so effortless the way he does that, and so I love hoops. And that changes everything. So cool. I like how you apply that to business. So now let's dive right into business. So first question, how do you define practical wealth? And then what is prosperity economics?
So practical wealth is I teach what I call principles-based planning. So it's practical. So it's no trick plays. There are principles to handling money. So like if you guys have read the Richest Man in Babylon, because really people say, what do you do? I really teach chapter 2 of the Richest Man in Babylon, the 7 cures for a lean purse, because you want to, the basics, you master, it's like basketball, right? You master the basics. And so it's the same thing with finances. And so prosperity economics is really looking at the world differently. When it comes to finances, we teach that there's 2 schools of thought when it comes to personal finance. There's what we call the accumulation theory, which is when you're hearing buy and hold, dollar cost average, get out of debt, buy term investor difference, developing retirement nest egg, but dollar cost averaging, all that is based on the theory that if you will stay in the market long range, it's the assumption that the market always goes up, and it's based on accumulation. But when you look at, if you start to study people with serious money, they don't do that. We call that I teach the velocity method, right? So the velocity of money is a principle, economic principle, that money's got to move. We talk about cash flow. We talk about leverage. We talk about, permanent insurance products. So when you study, if you took a corporate finance course, you see more of that. So prosperity economics is really teaching people how to do what the banks do, what the mutual fund companies do. How can you apply their business strategies, their model, and their philosophy about money to personal finance? And so that's what I do. That's what we teach.
Excellent. So it's accumulation theory versus velocity method. One is more maybe stagnant, and one's more, I don't know if you'd say passive is the right word, but the other one is velocity, where you're moving more, leveraging more, cash flow, teaching what the rich do. Is that a fair summary?
Yes. Yes.
Perfect. So what's the first secret to, I guess, breaking out of the old mindset of accumulation theory and getting into velocity method? Or what's the first practical step that you would recommend taking?
Well, so there's 5. So I teach, let's talk about the ideal plan, right? We core four cornerstones is you want to build maximum wealth. This is what you're trying to do. I'm gonna go backwards and I'll drill down a little bit. And then you want to be able to utilize all the wealth that you've created. So I want you to do it now. I don't believe in the deferred life. We want to be able to transfer our wealth to our families, our wealth and wisdom. And then you want to have a plan that works under all circumstances, right? So you can't have a plan that only works when markets go up, because markets go up, markets go down, markets go sideways. And you need to know how to make money in all four, right? So what I teach is principles-based planning. So just from a philosophical standpoint, there's principles, which are unchanging, there's strategy, and then there's tactics. Okay, so principles drive strategy, strategy drive tactics. So I'll go through them real quick and then we can stop and dig deeper in any ones you want to get into. So the first principle is save, right? And so we talk to our clients about is there a difference between saving and investing? Yes, there's a big difference. See, most people are taught to invest. We teach people to capitalize, and I want people saving, and it does not count their 401k, 15% or more of their gross income. Okay, so that's the first principle. Second principle is, I'll just run through them, maximum protection. So I call it playing defense, Brett. So you have to play defense. So you can't buy homeowners insurance when your house is on fire. So we walk people through all their protection, their car, their liability. Should you have umbrella policies? Do you have your estate plan? Do you have your entities? Do you have proper life insurance, human life value? Because what you want to be able to do is you have to protect the kingdom or the empire you're trying to build. And you've got to do it. You can't like create an LLC and move your assets if you are involved in a lawsuit. So you have to protect that stuff beforehand. So that's the second principle, because what we find is that too many people want to skip steps because it seems boring and they don't want to. I just had to have this conversation with somebody. Oh, I just want to do this. I was like, listen, you don't have a plan. You're running around buying all these courses, but you don't have a fundamental plan of if you're lucky enough to get some of this to work, you don't have a plan for what to do when the money hits your accounts, right? You don't manage cash flow, right? And the third one is I want to make sure that you leave a legacy for replacement of assets at death. The fourth one is one of the most important ones is liquidity. The number one problem I see is the lack of liquidity on an individual level, and so I want 6 to 12 months of cash. Okay. The pandemic proved that most people are too illiquid. Okay. They can't withstand interruptions in capital. They can't withstand downturns. They don't have any money if opportunities present themselves. You don't have access to capital. So that's major. And then the fifth is velocity. When we talk about the velocity method, what we focus on is teaching our clients to look to buy or build assets. What's an asset? Something that generates cash flow. Okay. And so we focus on cash flowing assets, not focusing on just growth or just capital gains. You have to look at it because you can't eat equity. So we teach people to focus on velocity and cash flow. That's kind of a long answer, but
it's a great answer. Yeah, there's I like those 5, and I got save, maximum protection. I think I missed the one between that one and liquidity and velocity.
Full replacement of assets at death. Principle 4 is liquidity.
Yeah.
And principle 5 is velocity. So, getting into, okay, I'm going to move my money through assets to buy things that generate cash. You save the cash and then you buy more assets to generate cash flow. Beautiful.
Love it. All right. That sounds fantastic. So now let's shift this into real estate and tax deferral. Part of our podcast is capital gains tax deferral. So I'm curious, do you own investment real estate yourself, Curtis?
Only one, and we'll probably have we'll have about 3 by the end of the year. Out of the 4 asset classes that we teach people, there's 4 asset classes: business, real estate, paper, and commodities, my favorite, because I guess I'm my father's son, is business. Because I can make a bit, that's my fastest path to cash, is creating value in the marketplace and generating money. So then you take the profits and you buy real estate. But right now, I'm more focused on growing our business.
So we'll focus on the business for a second. So what's the biggest frustration you found either for yourself, clients, or friends when it comes to tax deferral when selling a business?
So I haven't had anybody sell a business, but I actually like to get the taxes paid. I mean, while they're doing it and looking at the tax code to structure. The biggest frustration with the people in business is, one, they don't really have good tax strategy for the money that they're making, and lead generation and cash flow management. Those are the big three that when I'm talking to people that I see. I honestly haven't worked with a lot of people that have sold businesses. I actually got to get you on my show so we can talk about that. But I don't know if I didn't answer your question.
That's great. Yeah, no, and absolutely. Yeah, in structuring S corps or structuring, C corps or LLCs, depending on how you're doing it, right, and making sure you're getting maximum write-offs. Those are all ways. And then So
So let's all right. So because people think, I started a business and I opened up an LLC, right? And an LLC, correct me if I'm wrong, in and of itself is just a Schedule C, right? You're a sole proprietorship or a partnership. And so I think the two worst ways to be in business, because when you start to make money, you're going to get hit with that self-employment tax. Okay. And it's no deducting your way out of that. So that's when you need to look at in terms of, I don't know how to think of it. I never thought of it in tax deferral, but just restructuring, telling the IRS how you want to be taxed. So now if you can tax as an S corp, pay yourself a salary, now you don't have to pay the self-employment tax. So you're both halves like you do as a self-employment. So that's one of the biggies, just in talking to people about that. Oh, I got LLC. And I had a guy call me and say, I had $15,000 in tax. I said, well, I have an LLC. I said, well, what type are you? What election do you have? I don't know. I said, so do you file a Schedule C? He goes, yes. I said, well, go to XYZ page. You see where it says self-employment tax. He told me about how much he made. I said, so it's about $15,000, right? I said, yes. I said, you call your accountant and you need to talk about, I forget the form number, but creating an S election so you can keep more of your money. Okay. And is that what you mean?
Absolutely. No, that's a great answer. And that's lots of things you want to consider. Yeah. And then typically it's just depending on how much you're making per year, when you make that change. And when I first started out with my LLCs, we didn't necessarily file or convert it to an S corp. File as an S corp is the correct way to term that. Yeah. But once you're making a substantial, and check with your CPA. We don't give tax or legal advice.
That's right.
On the show, but check your CPA individual stuff. But yeah, it's important to know when to do that and do that early, right, before it's too late. Excellent. So so talk about to us. Like with clients coming to you, Curtis, what's the number? What's the the number one thing that they should be asking, but they forget to ask?
The number one thing is here's what people do. They ask for what I call club questions, right? And a club meaning that I always tell people, look, well, how does your business work? Or they'll say, how do you get paid? And I say, well, there's two ways. Let's say you're going to play in the Masters. I got two things to give you, but you can only have one. I can give you the clubs that are in the best players of the tour, or I could touch you on the shoulder, which one, and give you Tigers or Phil, since he's just one ability. So I give you his clubs or his ability. I'll ask him, which one would you rather have? They go, I want the swing. Great. Now, so most of the financial institutions are club manufacturers. Okay. And most financial people are club salespeople. So I had to back up. So mostly I get club questions, right? Should I get a SEP or traditional or solo 401k? Should I get, term insurance or permanent? Should I get a 15-year mortgage or a 30? So they ask club questions, but they don't really ask, but I'm the swing coach, right? So they don't really have, what's the most efficient way to create wealth? Okay. Is most of the number one problem I see with families and with business owners is lack of cash flow management. Okay. And they just don't know they don't think about how to pay themselves and get money out of the business. So They don't really come to me with that, but I know that's a problem. So how are you paying yourself? How do you pay, are you paying yourself a salary? Do you set aside money for profits? Tell me how you organize your cash. I mean, a lot of times that's where the rubber meets the road is cash flow management. They all want to invest, but they're giving more money away. I call these wealth transfers. So, most people think the key to growing their money is investing, but you really have to become more efficient. You can look at your debt. You can look at how you pay mortgages. You can look at taxes. You can look at how you fund retirement plans, kids' education, and major capital purchases, whether in your business or personally. There's more money lost in those 5 things. Like if you just learn to identify leaks in your business or personal economy, but they don't think about that. Everybody just wants to, hit a home run. And what I try to do is help people plug the leaks, because I can talk to you for 10 minutes and I can draw you out where you're losing money at. And let's keep, it's easier to keep it than to go, like every dollar you save is a dollar to your bottom line. And so the first thing when I work with business owners is we talk about that. And it's not sexy, but it's more money to find there. So I actually help people audit their cash flow and help them save. You got to keep the money that you make and stop losing money.
So we were talking about lack of cash flow management, and you were talking about, people earning the money, but they have these leaks in the pipes, right? The money's flowing in, but it's not going to the places like savings, like reinvesting back into the company, like it's maybe paying too much tax, like the LLC not being converted to the S corp. It's doing these things that are not efficient with the cash flow management. Is that a fair summary?
Yes, that's it. It's like, everybody's trying to grow, but you're losing money out of the back door. And so you have to shore that up first, because if you go out, everybody wants to spend money on marketing, but they're in it. You have to make money. You have to keep it and you have to grow it. Right. And so you're throwing money at Facebook ads. You don't know how they work and it's coming in and you just are people are inefficient on their marketing. That's a whole other topic. I'm working on a program on that and on 3 ways to grow your revenue. But because I'm the advisor that can talk about the 3 ways to grow your revenue, because marketing is your business. That's the business that you're in. Wherever business you think you're in the marketing business, right? And then, but when it comes in, you got to keep it. So it starts with deciding that, right back to the richest man in Babylon, part of all I earn is mine to keep. That's just got to be a philosophy. You got to keep it. And you've got to take it off the top. See, most business owners want to wait till, I got to pay all my bills, I got to pay my people, and if I have any money left over, I'll save it. So a great book to get that mindset is Profit First by Mike Michalowicz, right? And so your business will eat up all the money you give it. Okay. And so you've got to systematically take, I have like 4 accounts. So money comes in, boom, I've got a profit account, I got a tax account, I got my operations account, and then I pay myself a salary. All right. And so you've got to get money, because you have to if you shut everything down, you're still supposed to be financially dependent, right? You're still supposed to be rich. So that means you got to get money out and, buy real estate and start other business. I was listening to Jay Abraham, and one of the things he talked about is every year, you should buy another business. Like you should, like on an earn out, like with cash money, but you should set a goal to add new revenue to your business by buying other business. I was hearing him on a podcast. That was brilliant. So I wrote that in my journal. Okay, how can I do that? Let's start thinking about, because buying is the new starting, and so a lot of people don't think about that, but you've already got business that's already generating business. And, most of the business on these businesses are baby boomers that are tired. Their kids don't want the business. And a lot of times we don't think about that kind of stuff, how to scale by growing, but you still have to get your financials tight. You have to make sure that you're saving money. You have to make sure, we teach a strategy called becoming your own banker. You need to, everybody needs 2 businesses. The one that that keeps the lights on, that and their banking business, because what we teach people is the model Bank of America. How do they make money? Well, how can you incorporate that business model into your personal and business economy? So that's like There's a lot of stuff going on, but it's really simple. I don't know if I
Yeah,
make it
no, this
sound
is really
simple
good,
now.
Curtis. And by the way, just practically speaking, like, just curious personally, like, do you a bank account? You open up 4 separate accounts, and by the way, highly recommend Mike McAllowitz and Profit First and the Pumpkin Plan. Are
Yep.
you setting up, just 4 accounts at the same bank, and you call it the profits, right?
Yeah.
Savings, operations, and payroll. Pay yourself, right? Is that how you do it?
Yeah. 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 And I have like 3, 4 personal accounts.
Yeah.
The same thing. So I move it out of there. Only thing I do different, I teach a strategy we call cash flow mapping, where I have my own software where I teach it. So I integrate that. I was talking to somebody that was a bookkeeper that I had on our show that did Profit First, but she didn't know what to do with the profit money. And I said, well, let me show you how to connect the dots. And I showed her where she could move that money into, we just show people how to use permanent insurance as a place to store cash whole life, and how you can now leverage your capital without liquidating it, right? So now I use that money to buy or build assets. I use it for tuition. I use it to buy cars. I use it
Yeah.
for vacations and recapture my money. So now, because what Rich Dad says in principle in the book, Rich Dad Poor Dad, the lesson 3 is mind your own business, right? And so when stuff hits your asset column, you got to work to never let it leave, right? And so there are ways to do that, but again, it starts with your philosophy, your mindset. If that
Very well said. Very well said. And by the way, I'm just curious, what bank have you found to be the most seamless for all of the different accounts? Do you use a particular one,
yeah,
or what do you like?
I mean, it's nothing scientific. I had been with, what was it? Wachovia, and with the company before. I basically Wells Fargo. I just have it there. I think I have enough money now. I haven't noticed them charging me those little ticky tack fees, but they do if you don't have a lot of money, or enough money to keep the levels up. So I guess I have that. So I haven't noticed that, but there are probably other banks who do it. I think the bank doesn't really matter, because it's can you do online banking? Is it convenient? Do you know how it works? Is really the most important thing. You can get a little bit better rates with online bank. I won't promote them, but the key is it's not going to stay there that long, right? Because it's all about velocity. So you're moving them out, you're moving into other assets, and so you're not going to accumulate your way to financial freedom.
Got it. And the QuickBooks Pro, are you looking like QuickBooks Pro to like help manage like the cash flow and the flow of the funds? You're connecting the accounts. What do you use there for that?
Yeah, I use the Wells Fargo account to move it, but I track it with I got to fix it because it's a glitch in it. But Wave Accounting, which is a free
Wave accounting,
yeah, Wave Accounting,
riding like a surf wave,
right through Chrome,
cool.
Google Chrome. It's like a free app. And you can get it has you can do invoicing, and they have bookkeeping built in.
Cool. Yeah, just to get practical for the folks out there if they're curious where to start. Like they can just
because
go there.
It's real simple. Yeah, you got to get the accounts where it allows you to do it. Wave is free. You could get like QuickBooks Online because see the part for the tax part also. You need to track your stuff. You need to take pictures of your receipts because you need to get with a good tax strategist. But you need to keep good records. Okay. See, you're right. And that's your job, is to keep good records. So you got to have something, track your mileage, that kind of stuff. Because I bought printers in like February, right? And then by the time the end of the year, I'm doing my taxes, I forgot, well, I bought 2 printers and a laptop, and you forget all about it. Cause that was a long time ago, and your business, you're blowing and going. So you forget things that you should be writing off. So you just got to do it and not try to trust your memory and just
I do it right when I do it. I just take the picture of it, put it in my QuickBooks
That's
Pro
exactly
app,
what I do.
and then save it, and then it's there, and then I just throw the receipt away. I don't even want to see it again. So
if I go to Staples, I will take another 30, 40 seconds, sit there in the car, log it in, boom. It's just once you get the routine, it's easy. You can get like Mile IQ and track your mileage and all that stuff. So it's little hacks that you can do to help you, keep more of what you make, because your number one wealth transfer is taxes.
The biggest expense you've got, right?
Biggest expense you got.
Excellent. Well, we've been talking about building practical wealth with Curtis May, and you can find more about Curtis May at podpage.com/the-practical-wealth-show. Okay, so
I have to fix that.
Yeah, he's gonna fix that. But you can go to iTunes, look up the Practical Wealth Show go there.
You can
link up there. So it's Curtis May. So Curtis, are you ready for the lightning round?
I am.
All right. So knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget you would make sure to tell yourself to do?
Learn marketing. Learn marketing. I had, since I didn't understand marketing, my business was always up and down, and I was always prospecting, right? And you have to learn how to build a system that attracts continuous clients to you. That's what I would tell myself.
Perfect. What's the number one book you've recommended or gifted the most in the past year?
Rich, just a bunch. Golly, I'll say Rich Dad Poor Dad.
Perfect. Favorite leadership quote or theme that you strive to live by?
What's that guy's name? Garrett White is a book. That's a quote I love. He says, I'm a marketer, I'm a closer, I'm a leader, not a savior. So,
okay. Cool. I like it. What are you curious about right now?
I am curious about Turo, which is a Airbnb for cars. And so that's kind of like my business add-on. I'm researching right now. That will be in my next quarter. I had a woman I just talked to last night who heard me on Clubhouse, and she says, "Oh yeah, I got a car." She had a 2007 Infinity something with 200,000 miles, and she was making $800 a month renting out this car.
Wow, you got me curious too.
Yes.
I've even heard another one they come out with. I don't know what it's called, but they're like, park your RV in my backyard kind of thing. I'm like, what? I'm like, yeah, they're making serious cash, right? And so my aunt and uncle, they have like a couple acres up in Auburn. And I'm like, man, they could park like 10 RVs out there, right? And like, they're at this end of this cul-de-sac. I mean, way back, kind of a little in the sticks. So it's not going to bother anybody, just because no one else is really going to see it. Just going to be these big RVs coming through. But anyways, that's really cool.
You have to. What the theme of our show is wealth without Wall Street, right? So the world is full of people, ideas, and money. So you just have to begin to train your brain to look for opportunities to generate cash flow that you control. So anyway, I heard about that. So now I'm like, oh, I like this. Yeah, because I could pick up a car for $3,000-4,000.
I got a car out there right now. It doesn't get moved. I'm working from home so much. So, right on. Well, last question, Curtis. After all your success and helping so many people and loving what you do, and all the people you help them build cash flow, build velocity method of wealth building, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new goals?
Well, I think that with the people I'm serving, one, I'm really driven by the missions of creating financially independent families, because I think 98% of the information you're giving is wrong. All right. And so that drives me greatly, because I was a proponent of that for the first 15, 20 years of my career. And quite honestly, I'm pissed off. So I want to just kind of share with people. And our goal is, and my mission is to teach people to think, not what to think. So I view myself as their guide. I don't tell people what to invest in. And but my mission is to empower people to think. And that's really what drives me. And I don't, what's the word? I want freedom. I don't like people telling me what to do. We have a I'll keep it clean. We have a membership called a Cash Flow Nair, and the goal is to get to what we call the FU position. So you can do what you want to do, and passive income greater than expenses in a decade or less. So that is driving. I'm very contrarian. I don't like people telling me what to do. So that drives me greatly.
You're my kind of people, Curtis. I love it, brother. And so that's it. Really, that's it for the show. I want to thank you for being on the show, Curtis, and sharing so much inspiration, practical knowledge, wisdom. I'm better for it. I'm smarter for it. And I want to get more organized in my cash flow now that we talked. You're like kicking me in the butt here. But for our listeners who listen to you for the first time and want to get connected with you, could you remind them one last time where they can find you?
So I tell you, the first way I would do is I would check out the Practical Wealth Show, our podcast. And then I would look to my two easiest ways you'll get more information is the Practical Wealth Show, our YouTube channel, which I'll give you the notes. But if you search Practical Wealth Show on YouTube, it'll come up. And I actually have a report I could give them, if you don't mind.
Yeah, plug it.
Okay, so I have a report. Since we talked about the velocity over accumulation theory, I have something called a report called Creating Wealth Using the Velocity of Money, a free report.
Okay.
And so you can get it by texting BTS to 1-833-422-0250.
Excellent. Curtis, more than a pleasure having you on the show. We've been talking about building practical wealth with Curtis May. I want to encourage you to keep using the gifts of teaching people to think and not what to think, and having a tenacity to keep winning and growing and learning and working hard. So thank you so much for being on the show. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast, also streaming on expertcresecrets.com, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the deferred sales trust, is the best way for you to exit your cryptocurrency, real estate, primary home, save a failed 1031 exchange, and getting with someone like Curtis May to organize your wealth plan is the best way for you to grow your wealth. Please, please, please rate, review, subscribe, share this with somebody, get some more inspiration today, some more knowledge. We so appreciate everyone out there. Sorry for the glitch in the midway through the system, but sometimes that happens. And thanks for listening. Bye now.
Because they don't want this information out, so y'all gotta.
It's true, they don't want it out. Come on, everyone's got to help. Okay, bye now.
That's right.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.